And of course, we'll kind of go deeper, but what is one single reason that you see why people are not making money? What is the biggest obstacle?
Right. That's what I'm suggesting because a lot of people have one big bank account in business where all the money comes in and goes out. I call it the black hole bank account. It's like it goes in, goes out to the swirling vortex of doom, never to be seen again. That's really where a lot of entrepreneurs are scratching their head. Like, I just closed a deal and I got a bunch of money in last week. Why do I have like 5,000 this week in the account? Where last week they had like 50,000. And that's where, if you spread out the accounts and you name them specific things, I call the first three to set up because there's five foundational accounts, the golden trio of accounts.
Hello and welcome everyone to today's episode of Bigger Life Podcast. Today I have another awesome guest, David Richter out of Orlando, Florida. David is a author of a book, Profit First for Real Estate Investing. Also, David is a fractional CFO teaching people how to make profit out of real estate. Because in real estate, there are plenty of ways to make money and then plenty of ways to lose money. Hey, welcome, David. How are you doing today?
I'm doing good, Ray. How about yourself?
I'm doing just fine. Thanks for asking. So, David, before we kind of get into your book and towards your what you do today, what was your past life before this?
So, real estate investing. I was part of a company in my early 20s where we were doing about, when I first joined, they were doing about five wholesale deals a month outside of Chicago. And over those 5 years, we scaled it up to about 25 single family deals a month, between wholesaling them or fixing and flipping or, rentals, lease options. So, everything in the real estate space that you could think of on the single family side, we were doing. But you were doing 25 deals a month, but spending like 26 worth out the door. So it didn't really work, So like it just was like overhead was growing faster than our deal flow was growing. So that's what even got me kicked off on this side of things with like, okay, is it just us? Are other people going through this? And we were going to mastermind events and other things. And that's where I figured out it wasn't just us, it was other people as well too. Like they'd be saying, oh yeah, we're doing lots of deals or we're making lots of money, but then crying at the bar later because it's like hey, where's all my money gone? So that's where I really learned that it was more of an epidemic and then just an isolated case with us. But that's what I got started in real estate, and that just showed me that a lot of people make money but they don't know where it's going, or they don't have a good system to make sure that they're keeping the money. That's what got me kicked off in all of this, and I could go into that, but that my past life was real estate investing.
And you're right. I mean, when you see this money kind of flowing in, but then when you don't know what your bottom line is, those are two different things, right? So revenue is not equal to profits. And that's where I think your expertise kind of comes into the play. And of course, we'll kind of go deeper. But what is one single reason that you see why people are not making money? What is the biggest obstacle?
If we're talking about making it, I would say if someone's out there and they're not making money, it's because you're not doing revenue generating activities. Like, are you on the phone with people? Are you out going to appointments? Are you making connections, networking, that type of thing? If you can't get money in the door, keeping it's a separate thing. It's like if you're able to make it, but you're not able to keep it, that's because a lot of people are just, it's beat into our heads to do more deals or make more income and that'll solve all problems versus like actually understanding where you stand financially and the running the business end of the business, making sure that you actually have a profit. And a lot of people just aren't taught. They don't even know the first step of how to keep the money. They just know how to go out there and make deals happen if they've been taught that and if they actually take action. So from the making it standpoint, I'd say it's that taking the action, going out there, talking with people, getting the things rolling in the door. And then from the keep side, it's like just getting some first information because they don't have anything or any place to start that they know of.
I like it how you broke it out into making versus keeping.
Yeah.
And you defined it very well. Where making is the revenue generation part, and keeping is you have generated the revenue, but what's your net?
Right.
What is it
Exactly.
actually that you're keeping for yourself? Great information. Now, from here, on the keeping side, right, there's people are making all these, let's say, stupid mistakes, and some are avoidable, some are not avoidable.
Hmm.
Let's talk about both of them on the
Yeah.
keeping side, and then we'll come to making side as well. But before that, do you believe that real estate is an industry where people can genuinely make and then keep money, or this is overrated? as you kind of work with so many different investors and go through this exercise on a daily basis?
We work with investors. We're working with people that are doing deal flow and they have deal flow coming in. And if you can make money, I can see in the real estate space that you can keep it. It's just they're not taught like every entrepreneur. Every entrepreneur out there is taught like just make more money, more income, all that, but they never get taught like the steps to keeping it. So like once we actually teach them the steps and they follow it, it's crazy. They actually start keeping more because in real estate too, it's a unique opportunity in the entrepreneur space where in one deal, if you jump into it from a W 2 job, in one deal, potentially you have the opportunity to make the profit off one deal what you made the whole last year in your W 2, depending on where you were in the scales. And like if you're flipping or if you're doing a big, wholesale of a multifamily or something like that, like you can make significant amount of money. And when people do that, they might have been used to managing money from their job. And it's like, this is manageable because it's spread out over 12 months. Well, then they get that first hit and they're like, what do I do with this? How do I actually, okay, where does all this go? And then they do the natural thing, though it's natural to a business owner, is they spend everything that they've made back into the business and they don't build any systems or anything to keep it or to be able to even pay themselves or like make sure that they can repeat it or spread out the marketing over several months versus like here I just did a 6K deal, or a six-figure deal, let me throw everything back into marketing this month. So it's those things where they're not taught like what do I do with the dollar once it comes in so I can build a sustainable business versus this thing that just is like a roller coaster up and down all the time. So yes, I think I can see people keep it. It's just they've got to be taught the principles of money.
Let's talk about the principles. You talked about system. Let's talk about the system. So, what is
Yeah.
the system? What principles should someone follow to make money and then keep money?
Yeah. I honestly, it's taught about in all the major books. Like the main principle, like Rich Dad Poor Dad, he says it this way. He says pay yourself first, right? Like he says it throughout all that book. Then you've got The Richest Man in Babylon, just some of the most famous books in the entrepreneur space where he says a portion of all you have is yours to keep. The 7 Habits of Highly Effective People, put first things first. It's the same thing in your business. It's the principle of in a for-profit business, profit should be first, like making sure that you are healthy. I'm not saying that you put money above people and and like the things that matter in your life, but if you don't have the money and the profit there, everything suffers. So it's like we have to put good systems in place to make sure that's there and that you're taken care of. So what is the system behind it? Honestly, that's what I liked about when I read there's an original Profit First book that came out in about 2015, so like 10 years ago now, by a man named Mike McAlowitz. And it spun me on my head because I'd read Rich Dad Poor Dad. I'd read all those other books where they tell you kind of like the high level principle, but they don't give you a system. Okay, like how do I pay myself first? That sounds great, but what do I do? Profit First took it a step further to say, well, here's a system to back up that principle and that habit. And so honestly, it is real simple because it's built for entrepreneurs so they can start it whether they have a finance background or not. It's literally the envelope method for business. And it's like instead of envelopes and separating out your money into a bunch of envelopes, like if you've ever heard of that, Dave Ramsey's made that super popular, whether you love him or hate him. It's like he made it super popular in the personal finance space to make envelopes in your personal life and you spread out all your money based on your expenses and you name every dollar. Well, in your business, I want some general major categories that we set up as business checking accounts. So that way you as the owner have clarity into your own cash because you still need back end systems. You still need a QuickBooks and profit and loss balance sheet, like all this typical type stuff. But like to give yourself a fighting chance as an owner, if you haven't had any training whatsoever or don't know where to start, it's a good place to start with. Can I start to manage every dollar that flows through my fingers better? And so the system is about setting those up. And I could go into what those are named and everything, but that's the general system that backs up the principle that we hear in every single book taught out there of like paying yourself first.
Are you suggesting, like, as a business owner, you set up multiple checking accounts for those envelopes and then you deposit some kind of a money into those checking accounts?
Right. That's what I'm suggesting because a lot of people have one big bank account in business where all the money comes in and it goes out. I call it the black hole bank account. It's like it comes in, goes out to the swirling vortex of doom, never to be seen again. that's really where a lot of entrepreneurs are scratching their head. Like, I just closed a deal and I got a bunch of money in last week. Why do I have like 5,000 this week in the account? Where last week they had like 50,000. And that's where, if you spread out the accounts and you name them specific things, I call the first three to set up, because there's five foundational accounts, the golden trio of accounts. The first three should help you keep more. There's, we suggest a profit account. So that's like, why did I start my business? And I could fuel that fire. The owner's comp, to make sure that you can start compensating yourself for the work you do and having an actual account to pay yourself. Go figure. It's like, it's the whole pay yourself first system. The third account is for taxes. If you're going to be doing any active type of investing where there's going to be a sale and a capital gain and anything like that, then I would have a tax account. So that way, from every deal you do, a little bit goes in there. And at tax time, you've got the peace of mind to have the taxes taken care of. The other two are real simple. It's just income and expenses. So you've got income, what comes in, what goes out. I like separating those out. So it's not just all one account where everything goes in and out from. So you can actually see what came in, then you direct the money where to go. Like, how much needs to go to the operational expenses? How much can I put towards, those keep accounts, to be able to keep more. So that's the foundation of the system, to be able to get, like I said, give yourself a fighting chance as an entrepreneur. If you're just getting out there, you're getting started up and running, or even if you're down the road and you're doing lots of deals, like, I want you to be more profitable, because a lot of people treat profit as like an event and not a habit. And it should be a habit with every single deal, everything that you do. That should be at the forefront. Like, okay, and what am I going to do to protect this profit? Or if I do reinvest it, how do I make sure that it actually makes me a return? Where do I put it? And I want to have the money to be able to grow. So I need that profit there. So that's the system behind it.
So, David, this kind of system I think can work well where either you are doing fix and flips or wholesale because you have a chunk of money kind of coming in. How do you see this system working for investors who are into buy and hold?
Yeah. I write about that in the book, because there's different ways to set it up for that. Like, for on the buy and hold side, it's more about making sure that you know what you can actually transfer to yourself on a monthly basis. Because, like, when you start small, you've got the PITI, you've got the principal, interest, taxes, and like that stuff has to go out first before you start transferring the money and keeping some of it. So it's like, when you first start, we work with a lot of investors that are buy and hold that set up this system where they can get the clarity of, okay, cash wise now, because if you if you know anything about the back end of a buy and hold company, like, different transactions sit on the different reports, the balance sheet, the profit and loss, and, like, if you're doing interest or interest only, or do you have actual amortized payments. So it can get really confusing if you don't have a financial background to actually analyze the cash for the rental portfolio. So for us, it just helps solve that problem from the entrepreneur's level, to say, okay, I need a PITI account, like, for, or a debt payment account inside of my buy and hold system. And then I still want the income. So, like, whenever I get the income from the rentals or from the buy and holds, it goes into income. I make sure I have enough for the PITI. Then what's left over is to be able to transfer into my system. And just, we have certain percentages based on the size of the business that we recommend. It's different for buy and hold than it is for a fix and flip or an active type, business as well too. So we can definitely cater it to buy and hold, but it's it's for anyone that, if you're making money and you just want to direct the money better and you're in control of the cash, versus you have one big bank account, it's all going in and out and you have no idea what to do. You just make the tweaks and adjustments. That's why I wrote Profit First for real estate investing, because of these questions that a lot of people had 10 years ago. And, like, when I first read it in about 2019, there wasn't a book for real estate. And then I heard a lot of people at the other events I was going to, like, hey, I read Profit First, but, like, how do I apply this to buy and hold or to my fix and flip company? That's why I wrote the book, because it's a great system, but it definitely needs its tweaking for the real estate, because we're a lot of times asset based versus just, consulting fees, or like a brick and mortar company, like a restaurant or something like that.
Yeah,
So
we are very specific to real estate. Yep, definitely makes sense. Along with setting up the bank accounts, I think that's we can call it it's foundational, right?
very foundational. Yes.
Yeah, it's foundational. As a system, you set up the foundation. What other things kind of goes hand in hand to make it a good system?
Yeah. So the other thing is once you have it set up, because I like to frame it from, if you're in real estate, you're probably think that you're playing the real estate game, or that's the mindset you have. But honestly, as entrepreneurs, we're all playing the game of money. So what I just gave you there is like how to set up the game of money, at least at the beginning, to give yourself a fighting chance to actually have some to keep. So what do you do on a regular basis to make sure you're keeping it? That's where those percentages and rhythms come into play. Like in real estate, I recommend that every week or anytime you get money into the income account by Friday, you transfer it to the other account. So it never just sits around. Money likes to flow. Money's always in that process. So, like, I want to direct the money and I don't want it sitting for any amount of time in one account, just sitting there in one account. So I move it from income to the others. And that's where, as part of the system, those percentages come into play. And in the profit first, terminology, they're called TAPs, target allocation percentages. How much am I going to transfer percentage wise based on the size business? In the book, I give a breakdown, like here are the suggested percentages for if you're going to sell the property or if you're going to buy and hold it. And it changes depending on how big your business is. Because if you're just starting out, whether it's on the rental side or if it's on, the active side of selling the property, if you're going to have to replace your W-2 income at any time, your percentages are going to be need to be weighed heavily towards you and like paying yourself. So that way, at the first, you can start to build a reserve for yourself, or like, can you pay yourself enough to start to see the light of like, oh, okay, if I get enough X amount of dollars in the owner's comp account, and that covers X amount of months, like maybe 3 to 6 months or 12 months, then I can step away from my W 2 and make sure I could get paid for this amount of time. So that's where it gives the certain percentages, and it's weighed heavier up front when it's just you and you're starting, because there's not usually a lot of people or a lot of systems you have in place at the beginning. So you can, take a little bit more home. But then as you grow, those percentages, shift from paying you as much to be able to invest in the team and invest in the operations and invest in that type of thing, but it still protects you. It goes from, like, I think the first column is like almost 70% is towards some of your keep accounts, where the rest of it is like for marketing and scaling and growing. But then as it shifts, more goes towards OpEx to pay people and the marketing and all of that. So that's just where in the book I give the breakdown of like that. But that's the next step, is getting into regular rhythms of moving the money, and then being able to say how much or what should be the goal that I should be working towards in my in my column of like my business size.
Definitely, as your business kind of changes through its life cycle and is it's changing, going through different phases, I can see how those buckets or taps, the allocation is changing
Exactly.
from paying yourself to marketing and then from OpEx. Now, do you set up like auto sweeps, or are you saying that a person is kind of going into the account and handling it themselves?
There's actually banks now that are profit first friendly. There's a couple online banks like relayfi.com that actually have automatic transfers set up for the profit first system because so many entrepreneurs have been wanting it enough that they actually tailored their banking online system to it. There's another one too, baseline.com, which is more real estate friendly. Like the other one's kind of like in general for any type of business, Relay is, but the other one, baseline.com, is for real estate investors. And that one has profit first built into it as well too. And so you can go there to those types of banks, and a lot of the online banks have that functionality or something like that. But then the brick and mortar banks like Chase, Wells Fargo, like the big banks that you think of, I always tell people, don't let the bank stop you from at least starting. Maybe it might be one account you start with. Maybe you don't do the full thing. And like if your bank is really complicated or like it costs a bunch of money or fees or whatever, but it is important for you to start the habit of keeping money as soon as possible. So, like, set up one account, make it easy on yourself, and then you can explore those other like online, if you want to have some more automated functionality or if you want to have more options or set up the accounts. And like relayfi is free. Like you get up to 20 bank accounts for free online, and there's a paying version for like 30 a month, and you get like wires, I believe, for free, like unlimited. So I'm like, if you're paying wire fees at these other places, but you need to be sending a bunch of wires as a real estate investor, then you can look at some of these banks and what they, their incentives for being on like a paid type plan as well.
Absolutely. I can see how this is making sense, right? I have thought about my own investing or my own revenues, kind of setting up a tab, not to this level, but I was thinking, like I have a rental property which has its own LLC, and then the rent is coming in. And I'm like, okay, so let's just have a simple system. What if I keep the reserve, an X number of reserve, and anything above that kind of auto sweeps to my account, right? To
Yeah.
another account. So that way, if I have the reserve, it will take care of the PITI and whatever, right? So let's say
Hmm.
$10,000 reserve. So that's sufficient enough to cover, 5, 6 months of PITI, or if something catastrophic happens
Yeah.
immediately. But anything above that, why should I block that money into that particular account? Not normally, I just transfer it at the end of the year. When I file taxes, I see, okay, how much profit I have, and then keeping minus a reserve, then I just transfer at that time. But then, as you said, we are into not the business of real estate, but into the business of managing money.
Hmm.
I'm losing opportunities,
Yep.
or even on interest rate, because I have all these different other mortgages that I'm paying for. Maybe that profit could have been paid off some other principal down, right? Which will help a lower the overall interest that I have to pay on that particular mortgage, and b that particular mortgage will be paid off sooner.
Yeah.
So there's other side benefits of doing that.
Exactly. And what you're doing is proving why I love this system because you're asking different questions now. Like as an entrepreneur, and it's giving you options. When you have the money and you're able to manage it and effectively and efficiently, it usually gives you more options to be able to say, what can I do with this now to help, like wherever in the business or at home or whatever it might be. So that's what I love it. It's like this is why we teach the system to have those types of questions pop up to be like, huh, maybe I should do this because then now I can take advantage of it sooner.
It has to be more than the bank accounts, the system. So what's the next part of the system?
Honestly, for profit first, that's really the sum of it as far as self implementation for a real estate investor. Now there is more to it. Like with what we do, we go with people and we're analyzing their back end, like their books and their numbers, the profit and loss, if they have it in place to be like, what are your current percentages that you're doing now if you're already active in real estate, and like how close are you to your target? So there's a lot of assessing and analyzing of how has cash flown through and flowed through your business or flown out the door. And then from there, we're saying, okay, here's where you are currently and how you're running your business before you had this. And like, here's where your targets are and like, how close are we and how long do we think it's going to take to get out of this? Because Ray, we've worked with multiple people that come to us that they're making seven figures, but they haven't built good habits with their money. So we have to first, like Yoda said, you have to unlearn what you have learned. And so we have to like put them first into like the box of here, this is where your percentages are right now. It's not fun because like you can only do maybe 10% or 5% towards your keep accounts and you already have like 90% plus going out the door. So here's where we're starting. But part of the system is saying, okay, next month and or next quarter, depending on where their percentages are and everything, like can we do better next month percentage wise? And then next quarter, can we make a major transition from maybe 95% down to 85 or to 80% and be able to put more towards profit? So the other part of the system that's a little bit deeper dive that you might need some help if you don't have the financial background is more assessing your business. Where do I stand currently percentage wise versus how long would it take me to get to a healthy percentage and I actually feel like I'm keeping more of the money that I'm making.
Yeah, and that's where I think, correct me if I'm wrong, the power of bookkeeping and transaction level detail kind of comes into the play, right? How
Right.
you're categorizing those transactions, how well is that system, or the
Yep.
not the system, but that's kind of like the foundational steps on the other side of the equation. Like,
Yeah.
and the better it is, the more details you have over there, the more granular categorization you have, then it helps somebody like you who is helping other investors as a fractional CFO, where you are looking at the numbers and stuff. So
Yeah.
you get that opportunity to say, okay, this is wasteful spending, and you can cut this or reduce it, or
Yeah.
whatever the other tweaks that you can make.
I totally agree with that because a lot of people look at bookkeeping as that necessary evil, just to get the taxes filed at the end of the year, like be able to submit to the IRS when they don't understand that when on the scale of like $10 per hour tax versus like $10,000 per hour tax, yeah, the actual entry of inside of there and the data entry and collection might be a lower dollar per hour tax, but the analyzation of those numbers and what they really represent to you is more like an $1,000 or $10,000 per hour task to be able to make the decisions that will affect your business. So it's like we need the input up front and it needs to be accurate because the real money making from that and money keeping from that is being able to say, oh, shoot, like, yeah, we need to either cut this thing off or this marketing channel actually is producing 3x. And if we put more into it, we might push it up to 5x, or this one's only doing like 1.5 or like a negative return. Like, we need to shut that one off. It's like it's not returning anymore. So that's the power of knowing those numbers. That's why when we come in to a company, those are the first two things we're looking at. It's like, do you have a good bookkeeping system process in person? And do you have good cash flow management practices in place? Or do you need something like Profit First? Because it's like those two things, like you said, Ray, go hand in hand. And you could do Profit First on its own, but it's not as you won't unlock the full potential of it unless you have good numbers to support, like, okay, this is the actual percentage I'm at, this is where I want to go, and like these are the things and levers I can adjust in the business.
Sure. And for bookkeeping, it's everybody's dreaded task.
Yeah. Yes, it
Nobody
is.
wants to do it. And
Nope.
as you rightly said, it's just for taxes, but there's a lot of value that you can get out of it. So, how can you make bookkeeping simple and painless? What are your suggestions for that?
Sure. Have someone else do it. First of all, but that's where a lot of people fall off the track because they do have someone else do it, or they hire someone from wherever, maybe another country or like some third party, service in their network or whatever, but they don't know how to hold them accountable. So, if anything, it might create more headaches down the road than alleviate them because, like, they don't know, are they putting it in correctly? If you're in real estate as well, the books can get very complicated very quickly if you don't have the right bookkeeper and they don't know. If you're doing any type of creative investing, like buying a property subject to, or you've sold it on terms or payments or anything like that, yeah, the back end you don't even want to touch. So, this is why I created a fractional CFO company and not just a bookkeeping company when I first dove into this. Cause like I could give people clarity with good books and numbers, but I wanted someone to be a financial leader. So to me, the easy button is having someone that can translate what's happening and to manage that process. So that way can someone come in there to be able to be like, okay, I'll clean up your books. But then as a fractional CFO, we're making sure, are they doing it correctly? Is it actually being done? And then let's take the numbers that they give you, because usually most bookkeepers just hand you the reports and say, see ya. So we take the reports and say, this is what they mean. This is the decisions we can make together. So to me, that was the easy button for the entrepreneur. So that's why I created the fractional CFO and not just a bookkeeping company.
Now, as part of your service, do you offer bookkeeping as well, or just somebody else does the bookkeeping and then you just analyze the reports?
We offer it if they don't already have a good bookkeeper. Because some people come to us, they have a good bookkeeper, but they want a Profit First or a dashboards, things like that. But yes, if they come in and it's a royal mess, and we can go in there, clean it all up, and then provide the high level support as well.
Let's talk about tools.
Sure.
So, what technologies tools are you using as part of, like you mentioned about
Yeah.
dashboards? So, as part of creating and delivering those dashboards to your clients, and from a bookkeeping standpoint, what have you seen that? Which, of course, bookkeeping is plain and simple in one sense, but then every tool has its own pros and cons.
Yeah.
Which tool do you prefer, and why?
We prefer either QuickBooks Online or Zero just because that's where we've built APIs into them for our dashboard. Our dashboard is super user friendly because it's built on Google Sheets. So it's nothing crazy or like this, software out there like that. Oh, all this stuff. No, we have the dashboard, we have all the charts and graphs, but we want to be able to pull it directly from online solutions like QuickBooks or Zero. So those are the ones we recommend just because like that's how we can pull all the data in there faster and better for you. So that way, every day it updates. So if it's updated or the QuickBooks system is updated during the day, the next day your dashboard's updated. So you have like real time data that actually speaks to the entrepreneur because the the dashboard is set up so the entrepreneur understands, and it has like the typical things: forecast, budgeting. We do a lot of cash flow planning and management obviously on there, especially if you are in the buy and hold or fix and flip world. Those types of things. If you've got repairs, things coming down the pipeline, or if you're buying and holding and you've got, a big purchase and a big repair up front. So it's a lot of those things that we're managing. But honestly, those are the systems we like and keep it simple. As far as expense management, I like ramp.com. Ramp is a really good one, because you can really control what goes in and out, who has, if you start building a team, who has access to pay, how much they're able to charge. If you have a whole contractor team, you can give them actual cards, like just to be able to do, project purchases, and stuff like that. So it's really an expense management software that ties into like QuickBooks in your bank account, but it's more to make sure that you can pay the bills and it's really simple and easy for you. It's also the system for me personally that I love, because I don't have to actually open an app to send a receipt. I just snap a picture and text a number. So that way it's like, just it's as simple as humanly possible to get like the data to the software that needs to be gotten, to be able to actually record the data. So that's another system we really like as well, that's tangential to all this.
Yeah, this is not a paid promotion for Ramp, but I also use Ramp.
Oh, cool. Yeah.
Yeah, I like it a lot as well. And there are some other features like, so I make a purchase at Home Depot, and when I make a purchase, the receipt comes to the email.
Yep.
Now I have connected Ramp with my email, so what I don't even have to take a picture, right? So it
Right.
it
Yep.
goes to my email and scans it, and it matches the dollar and the merchant and pulls a receipt and auto categorizes it.
Yeah.
So it does reduce the burden on me to kind of fetch those receipts.
Right.
Yeah,
Yep.
does it still misses something? Yeah, here and there, but it's quite perfect if the receipts are coming to your inbox. Now, over the past 6 months, what I've started doing is I'm trying to sign up with these vendors, or wherever you make these
Yeah.
purchases. At sometime even at the cash counter, it gives you the option: print, email, print an email, and none. Right? I'm saying print an email, so I get the hard copy just so that I can look at it, but I know it will go to the email and Ramp will pick it up.
Yep. Yeah. That's another great feature too, is if you can get them to just email it, because then it scans your email inbox and captures those receipts. Yeah.
Yeah,
That's
because
another
taking
feature.
that picture, sometimes,
Yes.
you still
Yep.
kind of forget, right?
Yep.
Okay, perfect. Let's talk about real estate investors' other issue, which is you have all these monies coming in, and those monies, and then you have all these expenses happening. But then on the bookkeeping slash accounting standpoint, you have to do it by the property because that's how you're filing your taxes for. And from an accounting standpoint, and even from a bank account standpoint, so how do you suggest? Because sometimes it's not a separate LLC for each property, right? So people could have properties under their personal name, and then the monies are kind of coming into that bank account. We talked about taps, so we are not targeting taps here, but this is purely a separate question in regards to how do you suggest bookkeeping slash money management from a property standpoint?
That's where a good software will help you get to the nitty gritty details, like QuickBooks behind the scenes. For the cash management, what I care about is, does the owner understand how cash is flowing through their business? So for me, because a lot of people come in and if they've got a big portfolio, they're like, do I need to set up the system for each property? I'm like, no, 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 no. Like if you've got a bunch of rentals, then just set up one, like almost like a parent, profit first, where everything flows into it. Because if you do have like the individual income and account or expense accounts for each property, because that's how you're setting it up, or if you've got the series LLC or something like that. But then just for all the rentals, I just want to have, can I catch the money and keep it? And here's like my rental keep buckets. So that's usually how we do it on the money management, because that's more, like I said, the money management or the profit first system is for the entrepreneur to be able to keep more of what they're making and understand the flow of their money in the business. Where on the back end, I want you to have a great system like a QuickBooks or a Xero or something like that that can categorize out, here's each individual property, here's what the debt is on each one, here's where I got the debt from, here's the lender, or here's the bank, or whatever it might be, versus here's the income, here's the expenses, here's all the things that go into that property. Because then I could pull up a property individual report, like a mashup of the profit and loss balance sheet or whatever I want to be able to pull. So I'm very much in the vein of, I want both happening, if you have to start with something as the entrepreneur, I would start with the cash flow management piece and setting up like the system for it, because that way you could start to have peace of mind, and the cash gives you more options. So that way you could hire someone faster, to start taking over the books and invest in like a system like, a QuickBooks Online or Zero or something like that. So that's where it's that to me, I separate them out like that.
Do you separate it out like as a cost center accounting? So each property is its own cost center, or how do you do it in like QuickBooks?
In the
Because
actual chart of accounts, I like to set up like it's the, if it's the fixed assets or the long term, you've got them there. And then that's where we like to put each individual property in so we can see each one, unless it's one of those few investors that you work with that have like 400, 500. Then it might be categories or like tags or something like that in there. But most people, I like to be able to show them on the balance sheet, here's your fixed asset and here's the chart of account for that, and be able to see this is how much you spent on it versus how much your loan is. And like, did you have to put some of your own money in? So I'm doing it more like that. And I do like being able to tag the expenses that come, in and out of it. So you can see very clearly, okay, let me pull a report on this property to be able to see what came in and out on the back end. So I do like doing it like that as well too, because I tell people, if you have a software like that and you're going to invest in it, just like if you have a software to track the leads that are coming in to make the money, like the people that are coming in, if you have a backend system for your money, it's the same thing. It's like the CRM of your money. So track what you like, track as detailed as possible so you can follow the money. Where did it come from upstream all the way to what am I spending? Am I actually really keeping what I want to? And so, yes, like its own little cost center, and like being able to do that inside of there and just breaking it down as much as I can.
well, I really appreciate all this wisdom that you have
Yeah, for
shared.
sure. Thanks for having me.
So yeah, no, for people who are listening to this and they are thinking, man, this is an awesome idea of having a fractional CFO, but how much does these services cost?
Yeah.
So can you give like a ballpark or a range?
Yeah. So we do offer just bookkeeping. So that, I mean, those are the nominal rates. That's to be able to either whether it's a cleanup or ongoing. So we do take people that even if you are newer and you need some help getting it set up. So we do that on the bookkeeping side. On the fractional CFO side, we usually have two offerings. If you're a newer investor or a newer entrepreneur, still on if you're still on your way to seven figures and you've made at least 100,000, I would say, in top line and like in revenue, then we have what's called a 60-day implementation program where we implement what we call the financial foundation, making sure you have the right books, numbers, all that, making sure you get profit first set up, and making sure you have a good dashboard. So that one is more cost effective, and that one can range, like if it's a smaller business, anywhere from 2,500 up to, if it's on the seven figure side, it's more at like the 7,500 range. Then we have recurring packages for people if they're at that like 500,000 and above in revenue, and those can range anywhere from $1,800 and up on a monthly basis if they're looking for a fractional CFO ongoing. It just depends on how much access, how much you want them to do, how much customization you want versus what our set rhythms are in meetings and things like that as well. But those are the ranges you're looking at on the fractional CFO side.
So in the first bucket that you mentioned about, right? So do you
Yeah.
provide like a monthly guidance, or is it more like you provide the tools and it's for the users to kind of evaluate from those tools?
So from the if you're doing the 60-day program that we have, we're going to set up Profit First with you. We're going to be able to set up your dashboard during that time and clean everything up. So you'll have numbers, and we're teaching you during that time of how to interpret the dashboard, how to make sense of it, how to make decisions from there. But at the end of 60 days, they get everything that we give them and it's theirs to keep, but now it's their turn to run it because usually they're not big enough to sustain an ongoing relationship. But we give them all the tools and we teach them all the tools to be able to be effective in managing moving forward.
Alrighty, so that's great. So users have another avenue to see how they can not only just make money, but also keep money and analyze those numbers and cut on those wasteful spending and whatnot. Thank you, David. Thanks for joining today. I appreciate you joining this today's episode.
So if you go to simplecfo.com/gift, I give the ebook and audiobook. So if you're like, this is great, but like I need more info, or like how do I get this in place if I'm just starting out? That gives you access to my book and also like a little cheat sheet. So if you're wondering what bank account or banks I recommend or how to get this set up first, it gives you that at that website. So that way you can at least start. Like if you, even if you're on your first deal and you can't work with us, that's fine. Like I want to give you the tools to at least start this process so you can build some good money habits.
All right, sounds good. So that's a great takeaway from this episode. So you all get a free gift just going to the website. Thanks again, David. Thanks for sharing that.
Thank you, Ray.
Well, and to our listeners, thank you. Thanks for joining for today's episode. We'll be back next week with another episode about real estate investing. Thank you.